102 million American adults need life insurance but don't have it. If you're one of them, or if you're simply confused about how life insurance works, you're in the right place. Today, I'm going to break down everything you need to know about life insurance in plain English. No confusing jargon, no sales pitch, just the facts that could protect your family's financial future. Here's what we're covering. First, what life insurance actually is and why it matters. Second, the different types you can choose from. Third, how much coverage you actually need. And finally, the biggest mistakes people make and how to avoid them. Let's start with the basics. Life insurance is simply a contract between you and an insurance company. You pay a monthly or annual premium, and in exchange, if you pass away while the policy is active, the company pays a sum of money to the people you choose, called your beneficiaries. This money can cover mortgage payments, replace your income, pay for your children's education, or simply keep the lights on during an incredibly difficult time. Here's why this matters more than you might think. According to recent research, 47% of Americans say they would have trouble paying living expenses within just 6 months if their primary wage earner died. That's nearly half of all families living on the edge of financial disaster. And yet, only about half of American adults actually have life insurance coverage. Now let's talk about the two main types of life insurance you need to understand. First is term life insurance. This is the simplest and most affordable option. You buy coverage for a specific period, usually 10, 20, or 30 years. If you pass away during that term, your beneficiaries get the payout. If you outlive the term, the policy simply expires. A healthy 30-year-old can get $500,000 in coverage for around $25 to $30 per month. That's less than most people spend on coffee. The second type is whole life insurance. This covers you for your entire life, as long as you keep paying premiums. It also builds cash value over time that you can borrow against. The catch? It costs 5 to 15 times more than term insurance. For most young families, term life is the smarter choice. You get maximum protection during the years when you need it most, like when you're raising kids or paying off a mortgage. So how much coverage do you actually need? The general rule is 10 to 12 times your annual income. But here's a more thorough approach called the dime method. Add up your total debt, the income your family would need for the years you want to protect them, your remaining mortgage balance, and education costs for your children. That total is your target coverage amount. Don't forget to factor in funeral expenses, which typically run between $7,000 and $15,000. Here's something most people don't consider. If you have a spouse who stays home with the kids or works part-time, they need coverage too. Think about what it would cost to pay for childcare, housekeeping, meal preparation, and everything else that person handles. Those services aren't free to replace. Now let me share some critical mistakes to avoid. First, don't rely only on the life insurance your employer provides. Those group policies typically don't follow you when you change jobs, and they rarely provide enough coverage. Second, don't wait to buy. Premiums nearly double every decade you age. A policy that costs $30 a month at 30 could cost over $200 at 60. Third, never lie on your application. Failing to disclose health conditions or lifestyle factors can lead to your claim being denied when your family needs it most. Fourth, don't name minor children as direct beneficiaries. They legally cannot manage money, so you'll need to establish a trust or name a guardian instead. One more thing that trips people up is the cost perception. 72% of people overestimate how much life insurance costs. Many millennials think it costs 5 times more than it actually does. This fear of the price tag keeps millions of families unprotected when affordable options are available right now. Let me recap what we covered. Life insurance pays your beneficiaries a sum of money if you pass away. Term life is affordable and perfect for most families with temporary needs. Whole life costs more but provides lifetime coverage and cash value. Aim for 10 to 12 times your income in coverage, and buy as young as possible to lock in lower rates. Update your policy after major life events like marriage, having children, or buying a home. If this video helped you understand life insurance better, hit that subscribe button and give this video a like. It helps more people find this information when they need it most. And remember, the best time to get life insurance was yesterday. The second best time is today.